But let's go across to the big brokerage call of the morning. And Somit Sarkar is joining us. We're talking about M&M this morning, Somit.
Well, Citi has come out with this note where they have maintained their buy rating and have increased the target price by nearly 400 rupees. They have increased the target price to 3,810 from earlier target price of 3,480. Now, what the brokerage is saying is that the momentum, there's a strong momentum in both the utility vehicle and the tractor segment for M&M. They are saying, and the volume momentum is much stronger when you compare it with peers. Now, for FY26 year-to-date basis, if you look at the tractor volume growth for M&M, it stands at close to 10.5%, and this reflects the 9.2% growth that we are seeing in the industry, and this is coupled with a market share gain of nearly 50 basis points as per the brokerage. Now, along with this, given the fact that monsoon till date is nearly 5.2% above the long-term average, the demand outlook for tractors is quite positive, which will bode well for M&M going forward as per the brokerage. Now, apart from that, if you look at the utility vehicle segment, that has been firing on all fronts, is what the brokerage is saying. They say that M&M is now the second largest passenger vehicle OEM in India with a market share of nearly 15%, and they believe that along with this, the electric vehicle volumes are also encouraging, and the lower priced variants should lead to stronger volume growth for M&M going forward. Now, the brokerage has increased their volume estimates for tractor and utility vehicle by around 2% for over FY26 to FY28, and they have also increased the valuation multiple for M&M to around 30 times from 28 times, which has led to this increase in target price for Mahindra and Mahindra.
Okay, so M&M not showing too much action this morning, actually, nor is the market breadth as far as the 6 minutes of pre-open is concerned, but you're not seeing a very positive sentiment, and I suppose that's something that you're going to see through the day, Kush. We've spoken about a lot of stocks, including IT. Let's just get your view on TCS and the likes, and then if you're seeing anything worth looking at after the first 6 minutes of the pre-open session. We're almost close there.
But Tamanna, I think that might just change, if not through the day, maybe through the week. The reason is that, this is the monthly expiry this week, right? And we've seen funny things happen, when monthly expiries come around.
Well, Jane Street has been put on ice right now. They've not come back yet, is what we are reporting. So I don't know.
They were still just 12% of the entire kitty that the retail lost. So there's still about 88% left. No, so I think overall, this shorting, could see some covering. You could see some sort of an activity, and hence, one more addition to that view, where we could perhaps look at a rebound trade rather than a fresh shorting position. So on the whole, I think we're very close to, at least the intermediate lows. So look for a bounce towards 25,000 on the Nifty. Now, as far as the view on IT goes, not very constructive, at least from the near-term perspective. The last time around, most of these stocks rebounded were from oversold territories, while TCS particularly is in an oversold territory and could see a rebound to 3,200 and about 3,250 levels. I'm not sure if that will be sustainable. The only one that, looks good, just remotely, is actually Wipro, because this is the only stock in the big ones that hasn't broken below the 200-day moving average, where the other three are very convincingly below that mark. So maybe if you want to play, you could look at the Wipro for a long trade and TCS for a rebound trade, but you want to be quick, and as and when you get any profits on that, short covering trade, you might want to exit.